Good evening. Thanks for joining us at Adelaide Capital for our BYOB session in support of Canada Food Banks, or Food Banks Canada, I guess it is. I always get that wrong. Today we have a panel session on uranium, and I'm really excited about it because we've had two of what I think are the best uranium exploration and development companies present this week, which are IsoEnergy and NexGen Energy. And we also are joined by portfolio manager Warren Irwin, who had a viral video last week, which is his claim to fame now, I think. Right, Warren?
I don't know, whatever. What is it? 20? What's the last count? 27, 2,800?
I think so. I think it's going
All
to
right.
a million.
Oh, we're starting to get some interest in uranium. That's good.
Adelaide went nuclear, and it was really kicked off by that video.
Yeah, right.
Talk
right.
of the town. We won COVID. Craig Perry's beard also ranked highly on COVID. Anyway, without further ado, let's get started on the panel session. So thank you all for joining us. Thanks for participating in Uranium Week. A cheers to virtual cocktail hour. And remember that there's a lot of people out there that are struggling to put food on the table. So if you can make a donation to Food Banks Canada, please go ahead and do so. Hopefully we're almost through this pandemic. I think in Vancouver, you guys are on the other side and we're probably a week or two away. But without further ado, let's get started. My colleague Tina Byers is going to kick it off with the first question for the panel.
Do we want to do some quick intros?
Yeah. Sorry, I'm bad at that.
Leigh, why don't you kick it off and give us a little bit of a description about NexGen?
Sure. So Leigh Curyer, CEO of NexGen Energy, and we have the Arrow project in northern Saskatchewan, 350 million pounds, and currently under development in the final stages of our feasibility study, which will be ready in Q4 of this year, so about 6 months from now, and then submission of our environmental impact statement, which basically is formalizing all of the work we've done over the last 7 years into the one document, which that'll be scheduled to have submitted in the first quarter or early second quarter of 2021, so less than 12 months from now.
And Travis is with NexGen as well as SVP of Corporate Development. And Craig, maybe you want to get into a quick description of IsoEnergy?
Yeah, absolutely. So we're part of essentially the NexGen group. We're a spin out of NexGen. We moved a number of assets in the eastern Athabasca out into ISO back in 2016. Leigh, of course, is our chairman. Warren was one of our seed investors. Trav was a co-founder. So it's all fairly incestuous here. And we made our hurricane discovery back in mid-2018. We've been focused on drilling that out. We've got another, very high-grade, fantastic Athabascan discovery out on the eastern side of the basin, and we're focused there.
And Warren, other than being a YouTube celebrity, you do invest on the side, I guess. So what's your strategy?
Yeah, when I'm not on YouTube, I invest money. So I founded Rosseau Asset Management about 22 years ago. I've been in the finance business for about 34 years, and I've been involved in the last uranium cycle, and I've been involved with the NexGen pretty much near the beginning of their most recent discovery, the Arrow discovery. And I'm a real big fan of nuclear reactors, nuclear power, uranium, and I'm really looking forward to seeing how much fun we can have in this next bull market in uranium. It could be a lot of fun.
Yeah, it's interesting. Obviously, the last few weeks have been very strong for uranium. So on a more basic level, why do you think the prices have been moving so substantially despite the global pandemic?
Well, the thing I love about uranium is the demand is pretty much fixed. You've got 440 odd reactors. They're using up uranium every day, and on the supply side, you've got about they suck up the reactors use about 200 million pounds a year, a little bit less than that, and production is probably around Craig, jump in, or Leigh, jump in if you know the numbers better than I do. Given the recent shutdowns, I'm not 100% up to speed. You're thinking around 130 to 150 is kind of primary production. Is that right about now?
Yeah, I think scheduled for 2020, sorry, it was going to be around 135 million pounds.
Yeah. So we're in a very unique situation where we have demand.
Prior to the COVID reductions.
Yeah.
Yeah.
So we've got a unique situation where we have 200 million pounds of demand, 135 or less in supply. In previous years, where a number of people have called for a uranium market to build, the demand was always met by secondary supply, whether it be the Department of Energy selling for EPA cleanups, or whether it be former Russian nuclear warheads being converted back to usable uranium, or whether it was rumors of Japanese, German, Belgian, or other sources, secondary sources of supply, or even Kazatomprom, the big Kazakh producer, hitting the market with spot. So what I find interesting right now is we've got such a gap between supply and demand. We're really going to find out very, very quickly how much secondary product on the market is hitting the market. And my gut is over the next 12 to 24 months, we're going to really see a tightening of supply as some of the secondary supply gets hoovered up, and the cupboards will eventually become bare of the secondary supply. And then you've got a pretty serious undersupply issue. So that's sort of my quick and dirty take on the uranium market.
Yeah, and obviously there's been a huge decrease in supply over the last few weeks. Has the demand side shifted at all during this time?
On the demand side, there's approximately 440 operating reactors in the world. There's about 50 new nuclear reactors coming on in the next 3, 4, 5 years. Plus there's a few hundred that are in the planning or development stages, or even just countries just thinking about doing reactors. So the demand side looks pretty good. The other thing I draw to people's attention is when you open up a new reactor. So when these 50 new reactors come on stream, they'll generally take 2 to 3 times their annual consumption just to fuel up the reactor to begin with. So we've got a pretty low single-digit growth rate in demand, which is amazing. We've just got plummeting supply right now.
Mm-hmm.
I actually have a question. Sorry to jump in here. Warren, when we spoke last week, I know I put you on the spot and you love your research. So I know that you've gone and done a little bit more research on the nuclear build out. Do you want to provide an update on the topic now? How many reactors are coming online and what that looks like?
Okay, well, I've got them here in front of me. Basically, the numbers are not unlike what I just said, 440 already, another 50 coming on stream here. And then it's important to notice that there is the double to triple load. Some people tell me it's triple. I'm just being too conservative with the double load on the initial fuel up. The other important thing to remember is when I took a quick look at the installed capacity right now, on average around 900 megawatts, and the reactors being built are quite a bit bigger. They're around the 1.1 gigawatts. So you're getting you're getting all these factors. You're getting growth in the reactors. You're getting reactors that are built are bigger size. You're getting the initial fueling of the reactors. You're getting all these things happening. And I also think, with this COVID, it'll help a fair amount too, because I think a lot of people in Delhi, Beijing, Shanghai, any polluted city, they're probably getting used to having reasonably clean air. I remember my daughter lives in LA and she was telling me that she's shocked, and every day they're saying air quality forecast is to be good. She's going, this is unusual. People are telling me in some cities like Nairobi, they're telling me they could see Kilimanjaro, which is generally not a normal thing you could see there. And you see the before and after pictures on some of these on the internet, and it truly is incredible how much better these cities are now that there's no there's a lot less cars on the road. So we're going to need to electrify the world, and I think this COVID can really show people how clean our air can be in these big cities, and perhaps they'll be pushing a little bit harder to get some of these good solid baseload non-CO2 generating power for these cities.
Yeah, it'll be interesting. It's kind of crazy, actually, that we'll be coming up to the 10-year anniversary of Fukushima next March, but there still seems to be a sour taste in investors' mouths on the nuclear energy side. Maybe we can kind of shift the focus to that and address the idea of the safety and sustainability of nuclear energy.
Who wants to tackle that? I'll give you my 2 cents worth, and I'll leave it to the others to finish off. I'm aware of the next generation nuclear reactors. They offer 2 things. They're modular, and 2, they're fail-safe. Being modular allows them the standardization of parts. So whenever you create a nuclear reactor, the biggest cost is not the fuel, believe it or not. Fuel represents, I'm told, less than 5% of your operating costs. It's really the big capital you expend. So if you're modularizing things, you're standardizing parts, which reduces that capital expenditure. So the next generation, the Gen 4 reactors will be more modular. The second thing is fail-safe. The technology I'm more familiar with is molten salt reactors.
Lost Warren.
I did that on purpose. He was talking too much.
Going on to the internet connection in the Okanagan is not too good. I can add something there. You know, I think our sector gets the nuclear energy sector gets a very, very bad rap. And I think, it's more in sort of, the layman's field that it gets that bad rap. You know, we are the only form of stable baseload, clean, zero carbon energy. And if the world wants to, if we're taking climate change seriously, and this is an issue, you need more reactors. This is the only way to go. It'll be the only way to go for the next 30 years. Battery technology coming along, but we're still many, many years away from it. Leigh and I talk about this a fair bit, and Trav, we think that what we should be calling this is, rather than calling nuclear energy, we should rename it as clean, green, baseload energy. It is the way of the future, absolutely. It's certainly for the next 50 years. So, and you see that, countries, again, our business is a China story. It's Chinese demand that's driving demand growth, and reactor builds that are driving this. And I hear from a lot of people that say, why would you be in uranium? Why would you be in nuclear energy? It's yesterday's business, it's a dirty business, which is completely wrong. The countries that get it, like China, that want cleaner air and cleaner environments, are going nuclear. So, I think we do have a PR issue, and there's a bit to be done there. And Leigh and the team there are leading the way on some of that work.
Yeah, you're quite right, Craig. No one stops drinking the wine or eating the cheese from France or riding their bikes through the French countryside, of which 80% of that country is powered by nuclear energy. And there's also, I think, those critics of nuclear just completely ignore the number of deaths per year caused by coal-powered electrical stations, particularly in Beijing, where the World Health Organization has quoted there's up to 1 million deaths every year due to the sickness caused by the pollution from the coal-powered fire stations. And that's not even that's not even taking into account the number of days that schools are shut as a result of the air pollution in those capital cities. So, I think in light of what's happened, and people have noticeably seen a better air quality since the pandemic restrictions, that I think they're seeing that the benefits of nuclear, and I think it's going to be pushed from even those critics in the past, which never had criticisms based on the science. But I think it's very, very encouraging, and we've had a beautiful example of that with those photos. We have one on Travis's Twitter feed showing Delhi before COVID and post COVID, and it speaks for itself.
Yeah, I think generally there's a misunderstanding in the market or with the general investor about the safety profile around nuclear energy. And and then you get these adverse events like Fukushima that are newsworthy and make headlines and really impact the fundamentals of investing, I guess. So what do you think it will take to convince a generalist investor that the uranium bull market is real this time and not just a short-term supply shock?
Yeah, I might start with that one and say, look, in uranium, there's been occasions where people have been long and wrong. And, you know, we saw that leading into 2004, where the price of uranium had been $7 to $10 a pound for at least a 5-year period from the mid-90s through to 2004. And then, you know, we saw SARS in 2003, and then we saw a production go offline, and then we saw uranium prices go from $10 a pound in 2004 to $140 a pound in 2008. And the majority of long-term contracting in that cycle was done between $60 and $70 a pound US. You know, the difference between then and now, well, the top 5 mines that were in production during that 2004 to 2008 period are no longer in production. What have we seen? Well, as you know, as recent as 4 years ago, we saw the first signs of that supply stress on the uranium side start to materialize, where, you know, the average contract book of the major producers started to dip below $60 US a pound. You've seen production consequently come off, with those producers saying, look, long-term contracting has to come back at higher prices for us to sustain this production. And it's pure economics. The cost of production has been going up since 2004 and 2008, when those long-term contracts were written in the $60 to $70 range primarily. Now we've got a situation, we've got supply scares, and then it's COVID's come on top of it and brought some transparency to an already stressed supply situation. At the same time, demand has now exceeded pre-Fukushima levels. So we're at historical high demand for uranium. As to Warren's earlier points, the build out is 50 or under, or just under 50 or under construction as we speak. And we've got another 54 in the final detailed design phase, incorporating elite standards of safety. So we've got a perfect storm brewing here of demand, now the highest it's ever been. It's eaten up all of the demand that came off due to Fukushima, because those countries have seen and made their decisions based on the science with respect to clean, reliable energy. And then on the supply side, we've got enormous stress. The current spot price of uranium doesn't reflect the cost of production to just maintain current production levels, let alone incentivize any new production to meet the impending supply gap. So I think it's a completely different situation. People may have felt that they've been long and wrong on uranium in the past, as they did leading into 2004. Those people leading into 2004 were then dramatically right. And the stories are legendary as to the type of returns that people experienced during that time. I started in uranium 2002, and I've seen what wealth can be generated as a result of rising uranium prices. And when it starts, it really starts, and it takes off for a long period.
Well, I would say for sure that it is a very skeptical market right now. I think you see a lot of generalists that just don't believe that this rally is real. I think there's two real things that have been priced into the market that are incorrect, in my view, in the research that I've done. Number one, I think the generalist market thinks that Cigar Lake is coming back online soon. And number two, I think that they think that the Kazakhs are coming back and they're going to sell into the market. So I think if neither of those events happen, which have been priced in, then you will get the sustained rally in the market. But I don't know, I'm just a generalist approaching this after not having worked in the sector for a long time. But maybe you guys can talk to those points, whether you agree or disagree, and what you think it's going to take to overcome those and really have the sustained bull market. Craig, because I know you know the answer to at least a couple of them.
3 million there. Yeah, look, well, that's right. I think there's probably an underappreciation of what the real uranium price is today. We know, going back, I think 6 months ago, Cameco rolled over some of their long-term contracts, and whilst they can't and won't tell you what their contracts are written at, they made the point that on that quarterly call going back 3 quarters ago that we've told you that we'll only write long-term contracts that are north of $50 a pound. So what's the true price? And of course, we know spot market, noisy data point, largely irrelevant. But what can you get per pound per day for today for a stable supply? And that it's somewhere north of $50 a pound. That's the uranium price today, I think. And that's what people should be looking to. That's where the spot price is going to go. That's Tim Gitzel and the guys at Kazatomprom. That's where they want to take it, so that they can have a much tougher discussion with those utilities and customers. And the spot price, it's more relevant than it was, but it's still largely irrelevant. I don't think it's a true reflection of the uranium price. So prices. We're in I guess the technical term, and I shouldn't say this because I don't really know, but we're in backwardation, and spot price is slowly playing catch up to the long-term price. Of course, we've heard that Kazatomprom are not going to provide product into that spot market this year. That's, to my mind, the biggest on the supply side. That's the biggest news in the uranium sector in the last 5 years. So you've stripped out the main source of spot supply, and then Cameco, of course, who knows when they might bring Cigar Lake back on. They've been pretty clear that it's shut for an indefinite period. We suspect that it could be quite a long time. We're not quite clear on what their all-in sustaining costs are, but we know it's well north of where the spot price is today. So, when you match those things up, I think we'll soon see what the real, this price discovery process that we're in the thick of at the moment, we'll soon find out what the real price of uranium is. And I suspect it's well north of $60. And as we talked about when we presented there an hour and a half ago, in commodities, things always overshoot on the upside and undershoot on the downside. But we're in for an exciting ride over here for the next year or two.
Yeah, to your question, Deborah, for the ultimate skeptics out there, the impact of COVID-19 on production cuts is going to be, if you just want to ring fence it around COVID, this latest move, we've already seen the price go from $23 to $34. It shows you just how bare the cupboard is with respect to available supplies on the spot market. But for those ultimate skeptics, let's just ring fence it around COVID. There's one signal. But the fact is, this is going to be felt well into 2021. Just if you want to relate it to COVID. I think they do themselves a favour and look at what the supply stress was leading in to COVID-19. And that is the underlying driver in everything we're talking about. COVID has just brought some transparency on. For those ultimate skeptics, though, I don't think they could argue that the impact's going to be felt in the market at least through to 2021. But we're not confident on this. We are certain on this that these impacts are more related to the existing stress on the supply side, and it's going to be felt well into the next decade.
Well, we've seen the Kazakhs buying the spot market the last couple of weeks. I think that was on a Cameco call recently. And then, Craig, you and I talked an hour and a bit ago about Cigar Lake, which I think is relevant to talk a little bit more about the dynamics at Cigar Lake, because as I think you said on a call previously, they closed for safety concerns, but they're only going to open for commercial realities. I think that's the policy at Cigar Lake. So do you want to talk about that? And then Warren, you know what I'm going to ask you after.
Yeah, look, absolutely. I think that's their approach. They do want to see much higher prices, and they've been so very clear about that. They've done. We talked about that before. Of course, they've shown great industry leadership. They've shut down their production. They're protecting their people. They're protecting the communities they operate in and around. So. Another big tick for leadership that they're showing there on that front. but we know that they're talking to investors about, and as I mentioned there, I think Grant Isaac was on a call with BMO yesterday that's available online. I haven't listened to that yet, but I think the message will probably be fairly clear there from Cameco that they want to see prices higher so they can lock in those higher long-term contract prices. There's no point. They don't, Tim Gitzel's been very clear. We're not going to continue to sell product from our great tier one assets at low prices. It's so it's coming. They're doing the right things on that front, I think, and I wouldn't expect to see Cigar Lake come online too soon. And then, of course, at the back end of all of that, in 5 or 6 years' time, those projects, both Cigar and MacArthur, need serious investments to continue to keep them going. Now, in the meantime, there's a giant steamroller coming up behind them called NexGen and Arrow that's about to come and supplant some of that production. So, it's going to be an interesting period of time. To my mind, the key point in the medium term and that sort of time frame is, and we talked about this, Deb, that the really production starts to dry up come 24, 25, and so there's going to be a massive supply-demand gap. And so I really think the next couple of years will be very good, and then that will continue on into 24, 25, and when that supply-demand gap really opens up. So it's, to my mind, uranium and the uranium business is the place to be.
Well, I want to talk about your assets, but I want to finish the conversation just on the production that's offline right now. Does anyone have anything they want to add on Cigar Lake?
I agree 100% with Craig. Absolutely. They use the COVID as an excuse to take it offline. They'll leave it to economics to bring it back on.
And Warren, you have some controversial views on MacArthur River. And do you want to talk about those a little bit and why you think that asset's not coming back online anytime soon?
Yeah, I'm a couple of scotches into it now, so I'll probably be a little more.
Well, I won't freeze your camera as long as
all right. So here's my view, and it may be right or wrong, but this is my view. In October of 2018, I did a YouTube video with Palisade, and I talked about how a rather controversial view that I didn't think MacArthur was going to be opened up anytime soon, and possibly never. Here's my thought process on it. I know a number of old timers who've worked in these mines. And these mines, what you need to remember is, I've been investing in mining for several decades, and I've been to a lot of mines around the world. I've traveled to almost 70 countries. I've seen a lot of mines. I have not been to MacArthur River or Cigar, but I've reviewed how they mine there. And they are some of the most complicated mines in the entire world. When you think about it, you're mining uranium in waterlogged sandstone. In order to mine it, you need to freeze it in order to actually get in there and have competent rock to work with. Then in the case of MacArthur, sometimes, you've got uranium grade so high, you need to use unique technologies like raise boring, and raise boring is usually used to do shafts, ventilation shafts, but they're using it actually to mine. Because you're dealing with a lot of the high grade stuff. And then Cigar, you're using a lot of the jet boring and technology. So Cameco's pioneered a lot of very innovative mining technologies to mine this uranium, because it's right in the bottom where the basement rocks meet the sandstone in the unconformity area, for those of you familiar with how the depositional theory is for Cameco. But it's really, really tough mining. So my view on MacArthur, when it closed, I said it's not going to open for a very long time, if ever. Now, the reason I'm feeling that way is that I'm very familiar with NexGen's economics and the simplicity of mining NexGen, and the fact that it's in basement rocks. And it's just my personal belief that if I was running Cameco, if I was on the board of directors, I would have some serious reservations of spending the billions of dollars required to refurbish and expand MacArthur versus the alternative, which would be to pick off Arrow. And of course, I am an Arrow shareholder, a NexGen shareholder. I own just less than 5% of it. But those are the questions that I'm sure Cameco, the smart guys on the Cameco board and in management are asking themselves. Like, why would we spend the billions of dollars to refurb Cameco, refurb McArthur River, get back into production, and expand it when we could basically just buy a much more robust project in the early stages and drive forward with that. The other things that are driving my views on McArthur is I know a bunch of old timers who've worked in the McArthur mine, and they're telling me that, like with any mine, as you know, you go in and you mine the easy stuff first. And they're telling me that the uranium left to mine in McArthur is very, very difficult to mine, and it will be very, very challenging, and will be very expensive. So what I'm looking at is, let's say, a board member of Cameco, I'm looking at hitting zone 4 in McArthur and the technical and the cost challenges to mine there versus a greenfields project, which will start out fresh and you could high grade the richest portions, get your capital paid back very, very quickly. There's really, to me, no question. So that's sort of my view behind it as to why I felt McArthur will probably remain dormant for a very long time. Of course, if a third party, which is highly possible, would actually purchase NexGen and put the Arrow project into development, there is a chance Cameco will say, listen, we have no other options. We don't have an Arrow to put into production, so we'll fire up McArthur. So that's sort of my thought process is I think Cameco would be rather foolish to put McArthur back into production given some of the alternatives of greenfield production out there available.
Well, let's talk about some of those alternatives. We have two with us here today. So I think it parlays really well into, first I'll do a side note, which is anyone that owns NexGen owns ISO. So you should care about both. And I think they both are phenomenal assets, huge potential. But what you're talking about in terms of where producers are on the cost curve, let's talk about the development assets and where they are on the cost curve. I think this speaks volumes to the projects that we have represented today. So Leigh, why don't you kick it off in terms of where you think you are on the cost curve, because you've done a lot more work to figure that out.
Yeah, as per our pre-feasibility study that we issued in November 2018, which valid the previously issued PEA of 2017, it shows that the Arrow project will be the lowest on the cost curve on a per pound basis, and it's purely a function of its grade and also its technical setting being in the competent basement rock with a very clean metallurgy. So, you know, we're even with that cost curve incorporating some, well, I wouldn't call them expensive, but one of our objectives is to make this the most environmentally well-managed mine on the planet. And so we will be employing some methods which actually increase the operating cost. And those operating costs and the increases are in the PFS and incorporated. But even with the more expensive processing method to deliver an elite environmentally managed mine, we are still materially the lowest on the cost curve that you see in production.
And Craig?
Yeah, well, you know, that's annoying.
I know. Soon, I know.
No, look at it. You know, Leigh's, you know, that project is extraordinary, and I think it's one of the great deposits ever found, and will be one of the highest margin and best mines. And you know, it's just such a brilliant thing to talk about building what will be the world's cleanest and most environmentally friendly, sustainable miner. So it's hard to top. You know, we're in the early stages of discovery and delineation at Hurricane. I suppose you know, the great thing about Arrow is it's down in the basement in that competent rock, and it's got size and grade, of course. We've got size, we've got grade, we're an unconformity. We have an unconformity-related deposit there at Hurricane. The neat thing for us is we're only 320 metres down. So, you know, and there's, of course, been 2 key new developments in mining technology out in, for those types of deposits. Denison's been working on this in situ leaching approach, and they've put out some very low numbers in their PFS on that Phoenix Wheeler River project. So we're looking to that for a little bit of guidance. So, you know, we've been so impressed with that. It's a bit like, I don't know whether, you know, anyone remembers the Gillette ads, but we were so impressed that we bought the company sort of thing. We bought the technology. Peter Longo, who conceptualized that work and led that work, left Denison last year, and we've brought him onto the team on a contract basis to help us look at that opportunity. And then, of course, Orano have their Sabre borehole mining technology, which Steve talked about there an hour and a half ago. And that's another very, very low cost, low CapEx, low OpEx route to production. And then the only thing I think I've got Trump up my sleeve compared to Leigh is that we have a mill not far away. We've got that Orano mill that's underfed at the moment. If, like Warren says, Cigar Lake doesn't continue beyond its current mine life, then that mill runs out of feed. So, you know, we're perfectly positioned, being 40 kilometres away, to provide product into that. So we can strip that part of our CapEx out. So we're, you know, I think we're uniquely positioned. NexGen and ISO have a tremendously complementary set of assets there, albeit that Leigh's is a bit bigger than mine.
At the moment.
At the moment.
Yeah, and there's obviously additional projects in Namibia, for instance, and Namibia and in in other parts of Central Africa, like Niger. And my sense is once we start getting the uranium price spot, you know, $50, $60, $70 or wherever it ends up being, people will take a second look at that. The important thing to remember from an investment standpoint, and you know, a lot of people are on the call to make, or are on this call to make money, is that when we do get a run in uranium and a bull market in uranium, pigs will fly, and even the crappiest projects in the world will do very, very well. And in some instances, Craig, you could jump in too. Some of the crappiest projects were some of the best performers the last cycle. They ended up doing a round trip from zero to hundreds and hundreds of millions of dollar market cap back to zero again. But on a purely speculative basis, it's these marginal projects which only make money, let's say, at $60 spot, that can be really exciting for people, and they could be the ones that can really, really perform, because you could buy them for pennies now and they'll sell for dollars later. Whereas Leigh, that's the reason I'm invested with Leigh and NexGen, is it's considerably more conservative. If we don't get a massive run in uranium to $60, $70, $80, $100, we're still going to do very well. We'll make a bunch of money. But, you know, there is a scenario here, and Craig, I'd love to get your view on it, but you know, supply demand dynamics are quite unique in this instance, and we could see, you know, we could see $100 uranium perhaps. When I look at this uranium rally versus the previous one, this one is just rock solid, fundamentally based, right? Whereas the last one, you know, I think we ended up with like 600 juniors at the end of it all. And right now, what are we looking at? What, 30, 40, 45 juniors out there today, down from over 600 back in the last big uranium bull market. And there's also a ton of speculative interest in uranium with respect to some of these new funds that were created just to hold uranium itself. I understand I believe they were managed by Denison. Well, we'll see what happens in this one, because we're not seeing the huge speculative interest in raw uranium prices. This is actual buyers driving up the price of uranium, the actual end users. So if we start getting some capital thrown at this market, it could be pretty interesting to see what happens. Like the last time, I remember some very sharp people, what they were doing is they were putting a lot of money into a lot of these dodgy junior uranium companies. And then what they would do is they'd take a couple $100 million and throw it at uranium spot markets so they can make themselves right. I think this market is absolutely right for that type of trade. For instance, you take a look at NexGen. I think NexGen's trading at probably a third of where it should be trading today on today's fundamentals, let alone what tomorrow's fundamentals can be. So if you were able to load up on names like NexGen and a few of the other uranium players, and then throw $100 or $200 million at the spot market, so you're in there buying spot uranium along with along with Cameco buying their spot uranium to fill their contracts because they have no production now. It could lead to some very extraordinary situations within the uranium market. But we could see uranium quite a bit higher, in fact, multiples of what it is actually at the present time. Craig, I'd love to get your thought on that.
Yeah, look, I absolutely agree completely. And of course, the same dynamics that we saw, as Leigh said, drive the uranium price from $9 a pound in 2003 to over 140 in 2007. Exact same dynamics are at play right now, and punctuated by the full care and maintenance closure of Cigar Lake 3 weeks ago. So there's sort of very, very strong parallels. I think the difference is back then there were actually significantly more stockpiles around the world. We're about to find out what those stockpiles look like. I think they're significantly less. So do I think that uranium could go to $60 or $70 a pound? Yes. Do I think it could go over $100 a pound? Absolutely. The same dynamics are at play. Demand is much higher now. So look, you won't bet your house on it. And of course, what Leigh and I and our teams are doing is sticking to our knitting and focusing on our projects and advancing those quality projects so that our investors don't have to worry about where the uranium price goes. Can stay where it is now. Will still deliver good projects that can be built at, and certainly Leigh's Arrow is past that incentive price. The current uranium price is well north of the incentive price to bring that on stream. So we protect our investors that way by focusing on the projects and doing our work right. But in the next 2 years, could uranium punch through $100? Absolutely. If we find these stockpiles are very modest, Kazatomprom don't provide product to that market, and then you've got Cameco and Kazatomprom in the spot market buying product to meet their contracts. Holy dooly, things could really get moving.
So I have a fairly basic question. With all the closures right now, who is actually producing uranium into this market?
It's basically, I think the largest one would be BHP from Olympic Dam, but not all of their product goes to the spot market. And then there's some maybe smaller operators. Well, no one's producing in Namibia either at the moment on any material extent. But no, I think at the moment it would be predominantly just BHP out of the Olympic Dam mine in South Australia. Who'd be the only ones really in production at the moment.
Okay.
And that's a good point and a good question. We've done some analysis ourselves, and people talk about 40% of product being removed from the market because of COVID-19. We think it's considerably more. I think there's more work to be done on that front. At the risk of offending someone, I'd also say don't trust UxC and what they say, because I think their sort of analysis hasn't been terribly good on any of this stuff for many years. So I'd encourage people to dig a bit deeper and look at those cost curves that are out there and see what has actually been removed. We reckon it's a lot more than what has been reported.
I thought you were going to tell us not to trust Australians.
Yeah, no, don't. Well, hey, don't trust us in the Athabasca Basin. We come along and find all the good deposits.
I would personally like to thank Australia for coming to Canada and helping us with our uranium. Travis, what do you think? Should we thank these Australians for helping us?
I know.
You can say.
Tina and I got accused of being Australian this week at Adelaide Capital.
Yeah.
After the NexGen webinar on Twitter, I think you saw this, Travis. Somebody was like, good thing they're finally marketing in Australia. Like, with Adelaide Capital. Like,
Well, and to frame all our predictions here on the price of uranium, there have been a lot of very, very smart people, and everybody I think on this call can attest to it in the space. There have been a lot of very, very smart people, smarter than all of us, who know more about the uranium market than any of us, who have been calling for a run in uranium prices for many years now. So they've been wrong for quite a number of years, and we'll see. It doesn't mean that we're right this time, but it certainly seems to me that the fundamentals are there more than they were a couple of years ago when people were calling for a bull market, 2-3 years ago. So I think the time has finally come. Travis, do you have any thoughts on what's your thought on the price of uranium here going forward?
I totally agree with everything that was said. I think the other pieces that haven't been mentioned, which are really, really key and differentiated from the previous cycle, is geopolitics being one, which is completely different now than it was back then. But back then it was a globalization world. Now it's a nationalization world, and that means supply chains need to come home or closer to home, and that's obviously hugely beneficial for Canadian uranium. And the other one is, back then you also had a lot of new projects. Like, we've had a 9-year bear market where basically no dollars have been invested in any brownfields work, let alone any greenfields outside of, the people on this call and maybe a couple others, but there hasn't been any. So even when the prices come back, and it kind of gets back to the original point about, well, does Cigar and these other projects come back once COVID starts? That doesn't fix the problem. That's just starting to fill the cup back up, but it's nowhere near sufficient, and it's going to take a long time to get production online, even once the prices come back, in order to satisfy that supply-demand gap. So I don't see anything stopping the uranium price from going significantly higher to meet that incentive pricing, which is multiples from where we are today.
Building off your comment, like, nobody's talked about security of supply, which I think is going to continue to be a theme in the sector. And then one other interesting dynamic that I think COVID's presented, and this is going to be directed at you, Leigh. I think because you've seen some permitting delays and some delays with the government, do you think that there's going to be somewhat of a boomerang effect where the delays in the short term, once the economy's restarted and the Saskatchewan government's really focused on creating jobs and employment and increasing economic activity, do you think that you're going to see a lot of permitting and regulatory stuff pushed through faster in like the midterm? Or what do you think of that thought?
That's a good point, Deborah. And look, I think there's a lot of commentary that it takes a long time to permit a mine in Saskatchewan, and I got to tell you, from my experience, having permitted a mine in South Australia in the early 2000s, a uranium mine, and just to be parochial for a moment, like, South Australia has an excellent mining code, but also a complicated political aspect with respect to uranium mining, and we were successful permitting a uranium mine there. I've got to say, my experience with Saskatchewan has been absolutely outstanding. And you're talking about Australians coming to Saskatchewan. We could have come anywhere or gone anywhere right around the world to invest our dollars and our shareholders' dollars. And we chose Saskatchewan for a reason. The mineral endowment speaks for itself, but the mining code is absolutely outstanding. And on top of that, the disposition of the Saskatchewan government is, it's like they're a business, open for business. And their support of uranium mining, from exploration right through to production, is proven over a 30-year period. They're familiar with it. And from our experience as NexGen, and we've been working with them for about, ever since the project was discovered, and we knew we had a major project on our hands after the 30th hole. So, from a permitting perspective, we've been in it now for about 6 years, and the openness of the Saskatchewan government and working with us as a partner to get permitted has been absolutely outstanding. And I don't think the perspective that it takes a long time to permit a mine in Saskatchewan is actually correct. We are, moving very, very well through the process. I think what you may see, there'll be no shortcuts, of course, and we don't want any. We are going to fulfill every obligation and requirement, and that's going to be culminated in our EIS being submitted within 12 months from now. But I think what you'll find, to your point, Deborah, is that normally in a crisis, as we've experienced, is government policy very much becomes focused on economic policy and infrastructure projects. And we've seen the Saskatchewan government launch an additional $2 billion in infrastructure projects earlier this week to help address the economic consequences of the pandemic. And I think what you might see is, there might be a bit of a acceleration of, say, that process of review, maybe shortened. Who knows? But I think it could only be positive. And here's a project with respect to the Arrow one, just for the moment, where we are environmentally, it is very, very simple, and we've done work over the last 7 years to demonstrate that. We've got an opportunity to create 4,500 jobs, direct and indirect, very, very quickly. We're looking to bring money to the province as well, and it's going to generate extraordinary government royalties and revenue to help pay for some of these packages, stimulus packages that the Saskatchewan government have announced. So, look, I know the government understands the nature of our project extremely well, the benefits from an economic, but also from a community and a health and wellness perspective as well. And I think we were already on a very good path prior to COVID. And yeah, I think you're right. I think your comments got merit that we may end up in a development scenario earlier than what we would have otherwise expected. But we've still got, I want to be very, very clear. We have advanced that project very well over the last 7 years, and we're coming to the back end of formalising all of that work in an EIS, and then it'll be in the government's hands to approve it, which I have no doubt they will. The magical question is obviously when, but yeah, I don't see it being, given the technical simplicity of our project, as being all that long.
Well, I would think with the closures at the potash mines, the uranium mines, agriculture's got to be hurting, the oil and gas industry's hurting, like the province of Saskatchewan's got to be hurting. I don't even know if they put out stats on which provinces are the most affected by COVID, but one would think that that province has significant problems. I mean, we all do, but I would think that the government would be massively incentivized to create economic development there.
Yeah, their primary industry, they're heavily weighted in primary industry, and your comments are completely valid there. And look, we are taking the perspective of making sure that, every day we've made sure that we've optimized the opportunity and setting everyone up to look at the information and review it and approve it. But I think there would be a great stimulus for all primary producers out there in the mining agricultural industry to really advance their projects well. And with respect to uranium, as Warren and Craig and Travis all pointed out, there's a big supply gap coming. So it wouldn't be just our project, it would be all of the uranium producers in the basin there have a fantastic opportunity in front of them.
So Leigh, just a quick question for you. With respect to infrastructure program, the one that would probably benefit you the most would be probably a power line. Is that correct?
Yeah, we're still like fine tuning the power options at Arrow. Obviously, if there was a power line running past the project, fantastic. But that would be helpful. But I've got to say we're in pretty good shape infrastructure-wise at Arrow, given that the Clough Lake project, which was 70 kilometres further northwest of our project, that produced 62 million pounds in the 80s and 90s, there was a lot of infrastructure put in place for that uranium mine, and so we're coming off a pretty good head start. Obviously, a power line would be terrific if it was there. We're still finalising the economics with respect to whether it's on-site power or the development of a power line.
Yeah. And Deborah, another important thing to remember when you take a look at production of uranium around the world. I think this is where COVID is also going to change the uranium business a little bit too, in that the U.S. had been outsourcing everything, and Canada outsourcing all manufacturing of, let's say, N95 masks to China, and now we need them. It's not there. Well, I think the U.S., who is the largest consumer of uranium, they're going, well, do we want to be buying our uranium 100% from non-North American sources? Well, with Cameco and their two major mines being shut down and virtually, I'm not sure there's any production out of the U.S. in uranium. You just can't rely on former Eastern European, former USSR countries like Kazakhstan to source uranium going forward. It represents 20% of the U.S. power grid, and they'll need sources of uranium which are right close to home. And my personal opinion is there aren't enough uranium deposits in the U.S. that are economic enough anywhere near the current price of uranium to supply their needs. So they're going to have to rely on their number one ally in the world, which is Canada. So if they're relying on Canada for their uranium, we're going to have a pretty bright future here going forward, because as the U.S., I think the U.S. and the rest of the world have all learned that you have to look at your critical industries, and power is indeed one of the baseline critical industries, not unlike healthcare. And you have to make sure that everything that is used in that industry is sourced either locally within your country or with your close allies where you can get the product. So I think going forward, there will be quite a bit of pressure, I think, to make sure that we have so the U.S. has significant amounts of uranium that they purchase from either within the U.S., which is a very limited amount, or from their closest ally, which is Canada, and we're obviously a large producer of uranium. They could probably also have good trust of Australia, but they'll want to rely on Western supplies, I believe, to fund that, to feed the reactors. Do you guys have any other thoughts on that?
I think this parlays really well into what Tina wanted to talk about.
Yeah, I just, before the Q&A, I guess I wouldn't mind getting into that a little bit more. Obviously, the Trump administration has been pretty supportive of nuclear energy, suggesting potential to block imports from Russia and China, creating U.S. stockpiles. So yeah, I guess really the question is, how do you expect this to impact Canadian companies? And then with the election coming up, do you expect the administration to move forward with these implementations, or is there a chance that they go a different route?
Yeah, I'll just start it out very quickly. The Trump administration, for all their faults, have been quite pragmatic and have seen through the baloney of the renewables energy program, which is the fallacy that wind power and solar are going to power our future needs, which is absolutely not the case. And Michael Moore's film shed some light on that. They need to rely on good, solid nuclear power, and the Trump administration has figured that out. They'd ideally like to source it domestically, but the next best thing to a domestic source in the U.S. is a Canadian source. We're right next door. We have lots of uranium. We'd love to sell it to the Americans. Do you guys have any thoughts on that?
I would just add that's exactly right. And the U.S. is it's a complete renaissance going on in the U.S. Really. Like if you look back prior to Trump, it was a bit of a waning industry. It wasn't dying by any means, but there wasn't a lot of license renewals coming up. There wasn't any new builds being built. You flash forward a few years under the Trump administration, and I think what they've realized is that if there's geopolitically strategic and sensitive countries that are looking at building out nuclear fleets, like in the Middle East, like the Saudi Arabia is a perfect example. And really, when they came out and said, we want to build nuclear reactors, and the Russians and the Chinese came in and said, yeah, for sure, we'll build them for you. Well, the U.S. didn't really like that. And But to be fair to Saudi Arabia, they obviously said, well, you know, you don't really have that robust of new technology. You're not putting a lot of money or time or focus on new reactors and the future of your own domestic industry. So how can you, you know, supply us? And that's really what I think has driven this renaissance in the domestic industry in the U.S. is this desire to compete globally on the global stage, especially in these sensitive areas on these nuclear build-out programs for geopolitical reasons. So I don't see that changing anytime soon. And, you know, if you kind of break off Tina's question a little bit more directly, the budget, like in terms of getting the stockpile, that is obviously subject to congressional budget approval, which isn't done yet. But assuming that does happen, I think it's much bigger than that. That's obviously been a bit of a focus for the uranium industry, but that's actually just a little piece of it. It's good for their own industry and some specific players, assuming it gets budgetary approval. But the support there is much more broad than just a uranium business in the U.S. And the Nuclear Fuel Working Group made that very clear. And it really is about geopolitics and being a leader in the nuclear industry on the global stage.
So do you think the election speeds up policy action, or do you think it'll slow things down?
I think if Trump gets reelected, you know, I think he probably just has more confidence. But at the end of the day, it comes down to Congress on the budget side of it. But I don't, from a geopolitical policy perspective, I don't see that changing. And, you know, frankly, if it was anyone else, I can't really see anyone not viewing Saudi Arabia as being a geopolitically strategic area for the U.S. So I don't think it really changes that much either way you go.
Okay. So let's get into the some of the Q&A. We have a couple of questions before we finish off. One of the questions is, can Canada again become a leader in nuclear technology, and could private equity fund both mining and reactor technology?
Yeah, I say yes. And we've seen an initiative with the Premier of Saskatchewan, Scott Moe, and Ontario, and also help me here, Travis, Nova Scotia government, Travis?
New Brunswick.
New Brunswick, sorry, New Brunswick, get to collectively pursue the small modular reactor initiative on behalf of Canada. And then from a resource nuclear fuel perspective, well, the Athabasca Basin is the home of, you know, just so well endowed with the uranium. So yeah, I think not only Saskatchewan, but also Canada is going to be the most material player worldwide with respect to generating clean air energy for generations to come.
And we used to be too with the CANDU reactors. Like we have a history of nuclear technology advancement, and so I think it's natural, given that endowment of uranium, to finish that whole value piece of your exports and actually develop it. And I think it's natural for Canada. We have a lot of expertise, a lot of infrastructure in Canada. 20% of our country is powered by nuclear, which a lot of Canadians obviously don't know. But so yeah, I completely agree.
Yeah, and the company I'm most familiar with is Terrestrial Energy, which is sort of a Canadian-U.S. company, which is pioneering fail-safe modular molten salt reactors. And they're tied into the U.S. They're using a lot of Canadian talent, especially former Ontario Hydro nuclear specialists out of Ontario and Oakville specifically. So we have a lot of nuclear technology in Canada, specifically Ontario seems to be the hotbed of it. And we have all the nuclear fuel, and the U.S. is very, very supportive of new technology nuclear. So I'm sure the Canadians and the U.S., the Canadians and Americans will be working together on some of these new technologies. And it's truly a shame that there's been a half century of almost like a dark ages of half century since the 1970s, since 3 Mile Island, where there has not been the level of research into new nuclear technologies. Can you imagine today where we'd be if we continue to invest in nuclear R&D since the 1970s at 3 Mile Island, when all the environmental groups, which rightly or wrongly, they shut down all the shut down a lot of the nuclear build program in North America because they were all anti-nuke. Well, here we are 50 years later, and we've polluted the earth, and now we can't. We've got global warming and all these other issues which are directly related to the anti-nuke movement of the 1970s, which was run by, which was, you know, pioneered by a bunch of these environmental groups, which were in fact backed by groups that are in the thermal coal business, right? So we've taken sort of a half-century hiatus from serious R&D in the nuclear space, and it's great to see companies in Canada and the US moving forward with the next generation reactors, because frankly, it's our only hope. We cannot power this earth with solar and wind work, and not to mention some of the side effects of both those options. I think that Michael Moore had brought in his recent movie is recently, you know, a lot of people in renewables don't like it, but frankly, he brought a lot of points to that should be talked about. Al Gore, last time we met with Al Gore, you know, all he cared about was solar and wind. And in renewables, for some reason, nuclear doesn't even play a role. Nuclear should be the foundation of any non-CO2 generating electrical power grid, and anything else beyond that, whether it be the solar or wind, would be just complementary where they make sense. In Canada, it doesn't make sense to have solar in a lot of places because you get cloud cover all winter and you don't get a ton of sun. Southern US, you know, solar makes a lot more sense. And certain areas are windier than others. It makes sense where things are windier and there's less bird life to kill. But you combine it all together, there's only one answer, which is fail-safe nuclear reactors should be the basis for our electrical grid going here for the next 100 years.
I would just say that there's also, you know, there is a huge opportunity for the two to work together, like, and the British are, and this is where these SMRs come into play, where they're these small modular reactors, essentially the exact same technology that we have today, just shrink them, modularize them to maintain costs and make them, you know, 100 to 300 to 500 megawatts instead of these big 1500 megawatt plants that some areas don't need, and implement those combined with renewables to basically provide that backup for when there's the intermittent power issues that are inherent in renewables. So you kind of don't need batteries as much. Well, you basically don't need batteries. You have those as a backup, which, you know, today is in a lot of cases either coal plants that are backing up those renewable grids or natural gas plants backing them up. So kind of what the British are talking about doing with some of their more advanced SMR technology is rolling those out together.
So we have just a general question on pricing, which we kind of have already talked about, but do you think if the price runs to $60 that it will stay there and some of the projects will gear up again? Or do you think, and when do you think the price will reach $60?
Well, I think even if the price hits $60 tomorrow, it's actually a function of the physical ability of production to come on board. And I don't, there's just no way production could respond that quickly. So I suspect that we're in for a sustained period of very much higher uranium prices going forward.
Car companies are looking to link with lithium and other battery metal suppliers to ensure to secure supply chain. Are reactor makers and utilities emulating that? I guess it's just a general question about the supply chain and contracts.
Well, the Russians will, I don't know if this actually directly answers that question, but Russians do go into a country like, say, Argentina or somewhere and build a reactor and then pair that reactor with fuel. And so they'll basically guarantee fuel for a certain amount of time at a certain input cost. And so they're actually incentivized to keep the price lower because they make the money on the reactors. So some countries do that. And that, you know, frankly, the fact that one is doing that in terms of being Russia doing that, it just exacerbates the whole geopolitical need to diversify away from that source for Western. So.
Yeah, term contracting solves that issue. That's a little bit different than, let's say, battery metals in that the interesting thing about battery metals is, does anybody want to enter into a 10-year agreement to buy lithium because they don't know if lithium is going to be the best battery technology in 2 years' time, right? Whereas now, if you already own a reactor, you know your reactor's set up to work with uranium fuel, so you feel comfortable entering into a long-term contract with uranium. So it's already been happening. It's been happening for decades where you know, prudent utilities who want to make sure that they have a long-term supply have entered into long-term contracts with quality producers like Cameco.
Okay, we have another audience comment just asking us to discuss the Japanese above ground inventories.
Trav, you're an expert on this.
Yeah, I think look, they obviously have some inventories. They've been taking some supply since Fukushima, and they've shut down reactors. But I think, you know, whatever the exact number is debatable. I think you know, no country divulges their exact strategic resources transparently. But I think they that's a funny thing that just popped up. But Japan has some uranium, but I think the most important thing is, look, it's been 9 years since Fukushima, since all the reactors came off. They've sold in total, you know, maybe 150,000 pounds in total against like you know, quoted inventory of about 100 million pounds. Importantly, 100 million pounds is not all U3O8, it's other pieces of the fuel chain. And they do have a very long-term nature, significantly longer term view and more strategic view than the Western utilities would. And so they run high inventory levels naturally anyway. So even though on face value, an outsider or generalist coming in might say, oh, look, you know, Japan probably is sitting on a lot of inventory. They're not selling it. They haven't been selling any of it. In fact, every time they turn on reactors, they sell LNG and other forms of replacement energy into the markets. And they're incentivized to keep it in the country because they are restarting reactors. So why would they sell it at a loss now to lock in longer term contracts in the future when they do bring those reactors back online? Like, it wouldn't make any sense. So that is one area that we're, you know, it's important that they keep turning reactors on for sure, just from a demand perspective. But on the supply side, in terms of that material, that doesn't give us any concern at all.
My apologies, Travis. I was waiting for the right time to launch that one.
Yeah.
It's all real.
I don't know of many Amish people with an Australian accent, but
Brother Warren.
yes. Yeah, and another point here on the uranium is, as Travis had mentioned with respect to Japan, is Japan has taken a lot of this uranium, taken delivery of it on the take or pay contracts, and of course they're taking in this uranium, yet they've shut down their reactors. I ran this exact question by a uranium executive, and I won't name his name because everybody knows who it is, but it's a famous uranium executive who basically told me, he said, Warren, when they take it in, they actually start processing it and converting it into fuel rods. So by the time they get it, when they receive it and they process it, it's not in saleable condition. So by the time what they'd have to do is, you know, take the fuel rods apart and then convert it back to this, you know, the U3O8 to be sold on the spot market. So I'm not an expert on that part of the process, but that's what I'm told. A significant amount of the Japanese inventory is actually held in a format that is not readily sold in the spot market, and it's in the fuel rod, and it's already been processed, ready to enter into reactors, so it can't really been sold on the spot market. Anyways, that's what I was told by a senior.
That's right. I'd add to that. You know, that product's simply not fungible, and you know, we've spent a fair bit of time over the last couple of years talking to some of those big Japanese diversified industrial companies and trading houses about their take on the market. One in particular, Mitsubishi. You know, they've been quite. Their models are very bearish for the next 4 to 5 years, and then turn very bullish come 2025. And part of their bearish outlook is not related to those stockpiles. It's simply related to the fact that they have used UXC numbers and other numbers like that to assume that production will production will meet demand. And what we've seen over the last year is that that's simply not the case, and you've seen all of this production taken out. So I suspect that Japan and those trading houses are starting to turn bullish as well. So you know, I think simply not really an issue, anything that's going on in Japan.
Well, great. I think that wraps it up from my perspective. There's only one question left from the audience, which I guess is really directed at Tina and myself, about Adelaide and our investment in NexGen. So perhaps it wasn't clear because our network's grown quite a bit. Adelaide Capital is an IR firm. So we do live webinars, IR services for companies. So just to be clear, we don't have a corporate investment into NexGen. I'm a shareholder personally. I believe Tina is as well.
Yep.
Leigh and I worked together 7 years ago on a financing, but I don't believe since. So just to clear that up, there isn't actually, like, we're not investors as an entity. We're not a hedge fund or a mutual fund or anything like that. So just to be clear. And with that, I'd like to thank everyone for participating, and to the panelists for participating. And I'll hand it over to Tina, who's going to do a nice little summary for us.
Yeah, thanks everyone for being here. I think we learned a lot today, and as we mentioned before, you know, at a $33 price, even though there's been a large price movement in the last few weeks, I think it's obvious that there's still a long way to go, and we're looking at the uranium space in general. It's good timing, but also these are great assets. So I'm excited to see what's in store in the future, and I think $33 is very far off from
The accent's real, but the beard's fake.
And other than these are great stories, we learned that not a lot of people know who Craig Parry is.
Sorry, for anyone that's watching this, we did a couple polls during the session. The first one was asking if we thought that we asked the audience if they thought we were in a bull market for uranium, and I think it was 80% said yes. And then I asked them if they thought that Craig Parry's faking his Australian accent, and 27% said yes, 13% said no, and 60% asked who Craig Parry is. So there you go.
Yeah, so thanks Leigh, Travis, Warren, and whoever that guy is.
I think you got Zoom bombed, Tina. Finally.
Well, thanks. We appreciate everyone being here, and we will be doing a shift in focus to silver in a couple of weeks, which is one of the other commodities that we've been looking at pretty closely, so stay tuned for that. But in the meantime, we will be having a replay on YouTube as well if you're interested, and IsoEnergy and NexGen Energy's separate webinars will be on YouTube as well.
So thanks everyone.
Thanks guys.
Thank you, everyone.
Thanks, Tina. Thanks, Deb.